Hey, welcome back to another episode of Johnscryptotherapy. Today we're going to look at the Omi token. Really excited to look at the daily chart, show you guys the future projections and the future trends. So let's get right into it. If you guys do like these type of content, please make sure to like, share, and subscribe. So first off is first, we do want to define the trend. This right here is the downtrend. We're making lower lows, lower highs, and the structures before it, it's getting broken. So I put this dotted line right here, or this dashed line, to show you that we are breaking below previous structural lows. Don't get fooled now. We are absolutely in a bearish trend, and we want to keep that bearish mindset intact. Okay, so before we do get started, I want to delete this line just so we could get into the nitty-gritty of the little things right here. So first off is first, we do have this box. So what I like to do as well, I like to define these swings as boxes to define to myself, hey, we are looking bearish, and elements for our entries and styles that I do love to teach and use myself. So first off is first, we wanted to see price break towards the downside. We had this beautiful box. We understood that we're in a channel. Of course, this channel did break, and where did it break to? Towards the upside. That's why price got rejected towards the upside. And if you do use fair values and order blocks and patterns, you get the best of both worlds, especially if you know how to use them all together. So right here, guys, we had a breakout. When we defined to ourselves, where's the breakout going? Well, it went towards an order block area, exactly located around 0.0020. Exactly at that point, prices get towards this order block. We do not want to just enter the trade there. We want to make sure we get a deal. So before that, we always want to enter with a Fibonacci tool. So Fibonacci from the top all the way towards the bottom, and take a look at this. We want an equal number or a deal before we take that trade. When you look at this, we did get that beautiful deal around the 50 level. So that deal, once it wicked in, that was the beautiful trade that we entered towards the downside. And what we're guaranteed is towards the bottom. That's all we're guaranteed in the trading world. We're guaranteed the previous structural low because we don't know if we can break it, guys. Simple as it is. And that was one of our trades. This is like a box method trade that I like to teach and is very effective. This box is in the middle. It's not showing us an uptrend, nor is showing us a downtrend, but I wanted to put it in to show you guys, even when we get boxes like this, you can still validate your trades and your setups by using the right tools or looking a little bit smaller. Remember, everything is fractal, so that means you could look at it in a smaller nature, and you could look at this on a smaller scale, basically on a lower time frame. But we're not going to do that today. We're just going to go in towards the future price action to show you guys the future resemblance of where price is trying to go. So right here, guys, we are talking about fair value gaps, and I want to show you something really cool. So fair value gaps are right here where there's gaps in the market where we don't see prices entering that zone. So you look at the first candle and the third candle, and in between it's the middle candle. And exactly what price does is it comes into that level and taps in towards that level. And if you entered into that trade, you would have most likely gone into a loss. But does that stop you from trading? No, absolutely not. So if you do enter this trade and you would have gone into a loss, that doesn't mean your idea was wrong. That doesn't mean anything else was wrong. That means you got to look bigger. You got to understand. So that means this box, this little box, does not exist in the bigger box idea. So that means we're going to take this box, we're going to highlight it from this zone, and then take it all the way towards our next level. Go towards the wicks of the body as well. And if you take it towards the wicks of the body, you guys can tell clearly what price is doing. It tapped in exactly towards that level as well. And this box idea, or this tap in idea, is just the same idea right here, guys, that we're just seeing a double tap right before it goes back down. So that means as long as the box is intact and that we're not breaking the previous structural high, that means regardless, what we're trying to do is one thing. That concept is to sell. So that means when prices came back towards that level, we're within that Fibonacci level of 50%, or roughly around that Fibonacci level. As long as our stops are above the order block level, we can absolutely take that smashing trade towards the downside. This is the concept that we're using every single time. So now we know we made a new low. We're looking for this bottom to be broken. In order for this bottom to be broken, most of the time, if you're a pattern trader, there's going to be a pattern to define to ourselves, hey, would this pattern help us to break structure towards the downside? Just like here, we had structure at this very moment, did not break. But if this pattern did break towards the downside and we broke this trend line towards the downside, then guess what? We would have went down. But because we broke up, we went into an order block area. And of course, this order block area was not by itself. What else was in there before the order block? It was also a fair value gap. And this fair value gap told us one thing. It needed to break up towards the upside to fill this order in order for it to get leverage of a lot of sellers to push price back down. I was really surprised to see that we did not get a liquidity wick right here, breaking above the previous structure, liquidating those orders, and then getting those people out of those trades so price can be pushed even deeper. Because we did not get a liquidity wick, that's why price did not really fall as far as it could have. And if we did get a liquidity wick right here and we did take those traders out, then absolutely this move would have been even lower. So because of that, we're still fine. We're understanding this is the structure that we're dealing with now. So because of that case scenario, we are looking at a symmetrical triangle, guys. Symmetrical triangle, this is the bigger picture. Keep this in mind. If we do break towards the upside, which it would be great for this short period of time. So a lot of people will say, hey, if we break up, that means we're bullish. Technically wrong, guys. We're not bullish yet. The only place that we can truly be bullish is if we break the previous structural high. If we do not break the previous structural high, we are not bullish at all. Every single thing we're doing is to look for small sells. As long as the project, yes, it's going to go to the moon, it's going to do a lot of amazing things, but if your purpose is to be a trader, and your purpose is to get more Omi token, this is the only way I see how it's done. So take a look at this. If this does break towards the upside, which will be great because we will fill this fair value gap right here, then guess what's going to happen? We can see a ranging market, liquidity wick maybe, and then price can fall towards the downside. If prices choose to go a little bit higher, that is absolutely fine. There is another fair value gap right here. And of course, the most important thing, there is another order block all the way towards the top. So that means price can range all the way towards these levels before going towards the downside. What I think it's going to happen is this is going to be a perfect level for a beautiful fake out. We can absolutely see maybe prices breaking towards the downside, everyone expecting price to now go down. But then it's going to dramatically come out with the wick back into one of these zones, then we can see a huge move towards the downside. Right now, Omi is not ready to pump, and it does not deserve to pump at the very moment. Reasons why crypto is down and a lot of things are going down. And of course, Omi is doing a lot of things in the background, but just looking at price action, looking at the nature of the trend, and we are still bearish. Let's still keep that idea intact until we see previous structures broken. This is a long-term projection. If we do break the symmetrical triangle towards the downside, and we do have a clear validation, a clear break of the 0.00070 level with a retest, not just a break and getting into your trade. We want to see that retest. Once we get that retest and confirmation for our entry, then I will look to sell. But for this time being, I do see some fair value gaps and order blocks it's going to go into. But maybe here we can see a liquidity wick before we go down. What I'm expecting is price to go down. What I need price to do is liquidate within these fair value gaps and order blocks before it goes down. Because if it goes down, it will liquidate, then come back down and it'll smash you all the way through. And you don't want that to happen, especially in the trading world. So let's go into the 4 hour real quick, guys. All right, on the 4 hour, this is a smaller spectrum, right? We do have a lot of information right here. Take a look at this, guys. We do have an expanding channel. Expanding channel was showing us what price wanted to do. We came into this lower time frame right here, and we even said to ourselves, we wanted to see a liquidity wick. Guys, there was absolutely a liquidity wick because everything is fractal. Let's go into the lower time frame right here. Once we're in the lower time frame, the 1 hour, take a look at where the liquidity wick happened. If you took a trade here, there was a liquidity wick right here, a liquidity grab. It grabbed your liquidity, and guess what it did right away? It pushed all the way back up. There was an absolute amazing trade here. And if you were a little bit hesitant and you wanted to trade above this bearish candle, engulfing bearish candle, that's absolutely fine. And you would have still made a good rally towards the upper trend line. Take a look again, guys. Liquidity wick once again in action. And guess what? That's what happened. Price went down. There's these type of formations every single time. If you open your eyes and see the structures for what it is, there's a lot of these formations happening every single time, okay? Even though we had this move, we did have another channel or a wedge going towards the zone. So once it broke, it came back in, and exactly what did it do? It filled within these orders that we were looking for. Then we looked for that immediate sell. And once we look for that immediate sell, what do you think is happening? Well, take a look at this. Well, price came back into this level. A lot of people would have had their sell orders right here towards the downside, leaving it thinking that it's going to go even lower. And now we just got wicked out. That means that there's a high probability we can maybe go back to these all-time lows here, test that level, or even go towards the bottom before anything else happens. But if you took your trade on the bigger time frame, these wicks are pretty much equal. And if they're equal, we could see another wick maybe popping off before it goes down. But what I'm expecting right now is for price to go a little bit lower. If it does break towards the upside, that's totally fine. We understand if it breaks towards the upside when we go to the daily, that there is a lot of orders that it needs to fill before it goes a little bit lower. So if the orders don't happen, what we could see is this going sideways, but we need the pressure of the symmetrical triangle to break out one way or another. If it does break up towards the upside, which it is going to be a great move, because if it does break, where does it go? Exactly into a fair value gap. We can put our stops just above. If it goes higher, we put our stops just above. If it goes to order block, we put our stops just above. And the same concept. We're looking for that one concept of selling. But if prices do break the previous structural high, which is located right here, then absolutely, then we're going to look for our amazing move towards the upside. So now we're deciding what to do. We're still in that indecision phase because we're in that symmetrical triangle. We don't have that clear break yet. Once we have that break and we determine where the nature of the trend is going, this is going to be another huge move that you can really, really massively pile up your OMI tokens. So once again, guys, if you guys do like these type of content, please make sure to like, share, and subscribe. Remember, everything that I say is not financial advice. This is just how I trade and how I teach and how I look at the markets. Make sure to use this as education and do your own back testing and research. Other than that, thank you so much. Take it easy and John out. Peace.